done. So without further ado, I'm going to hand over to Patty.
Thanks very much, Lucy. Hello, everyone. I'll just introduce myself briefly. As Lucy said, I'm Patty Clayton, and I am the lead dairy analyst in AHDB for dairy. I've been with the company now for 13 years. I'm just trying to share the right screen here. Apologize. So I'll be taking you through today through the presentation. I've got really the main, I suppose, content here. Let me just, can you see the right screen, Lucy? You can, perfect. Okay. So really what I want to do is, the markets right now are pretty volatile. There's lots of uncertainty, and we're in a situation, I suppose, that's just unprecedented and really creating lots of questions, because things are moving so fast and there's been such big shifts in what's going on. So I thought it would be useful to just take you through what's sort of behind some of the issues in dairy markets, why milk prices are so high, how that's impacting both production and the markets. So the order of the day really is to look a little bit at the factors behind the high milk prices, and then we'll have a look at what the outlook is in terms of those factors that are causing that situation with high milk prices and production volumes. And then I'll look a little bit more in more detail at a couple of regional cheese markets, in particular the US and the EU, because those tend to be the key export markets. I know that Asia is a key sort of, I suppose, target market, but we have very little insight into what's going on there in terms of data. So I'm going to focus on those two markets for today. So to start with, there we go. I guess the thing to start with here is the fact that Farmgate milk prices, which is obviously a key cost in cheese manufacture, have really surged since the beginning of this year. And that's not just happened here in the UK, but we've also seen the same sort of, rapid rise in that raw milk cost in both in the US and the EU, two of the really big key milk producing regions. Part of the reason for that is it initially started sort of late 2021, where we started to see a big pull on dairy product demand. And that was on the back of this demand surge when everything opened up again. People were going, back into work, back into, if you will, real life as much as they could. And we saw this demand surge happening globally. And that really pulled up milk prices, because we hadn't been producing a lot of milk up until that point. The other reason is the fact that at farm level, there hasn't been a lot of milk produced because, one, we've had tight labor availability. And again, this is an issue that is happening across most key regions. The US and New Zealand and EU are all struggling with getting labor to work on farm. And then we had, particularly since October of last year, we had very, very high input cost inflation at the farm level. So it was becoming very, very expensive to produce milk. And that was further stymieing this milk production growth that was needed to perhaps meet that demand. So if we, on the next slide, I'll show you here what the cost of production, I suppose, rate of increase has been over the last couple of years. And you can see from 2019 through to about the middle of 2021, although we were starting to see some increases there, it was relatively flat, and pretty manageable. But then in Q3 2021, that was when the energy crisis really hit. And we've seen farm input costs just, inflate at a really, really rapid rate. Very, very difficult to manage. And having huge impacts on the ability of farmers to make ends meet and therefore to produce. So just as an example, in the UK, although if you notice those graphs, you can see we're seeing similar rates elsewhere. But just in the UK, the quarter-on-quarter, or the year-on-year change as of Q2 of this year was 165% for fertiliser. Now that's just an average, and for some farms they're seeing fourfold increases in the cost of fertiliser. It depended on whether they bought forward or not. Fuel's gone up 62%, and feeds went up year on year 31%. But feed's been increasing for quite a long time now, and actually over the last 2 years it's increased by almost 60%. So that cost increase at farm level has really had an impact on farmers' ability to make ends meet, and it's affected their production. So, and again, at a global level. So I've put on the global figures here, but all of those factors, that tight labor availability, those really high costs, and although we've seen the milk prices go up in reaction to that, they've only really just kept pace. If anything, they maybe even haven't quite kept pace in some regions. And therefore, at a global level, we're seeing all of that sort of bring together, and it's reducing farmers' confidence, but also their margins. And the forecast for this year at a global level is that we're going to see about 0.5% less milk than we did last year. And last year it grew quite slowly. So milk production growth has been really, really slow, but demand has been actually still growing at a pretty decent rate. So that's putting quite a lot of pressure on those markets, and it's really pulling up not just the milk price, but also the wholesale prices of most dairy commodities. The graph in red there is just showing you how that reduction in milk supply for this particular calendar year is split amongst the key producers. So the vast majority of that loss, if you will, is in the EU, but the US, who've seen, they've seen steady growth at around 2% over the last 5 to 10 years, have actually declined. Now it's only a small decline for them, but it is the first time we've seen a drop in milk production in the US for a very, very long time. So all of that is really putting a lot of pressure on markets, and it's, I suppose this is the I'm going to now go into the US, but at a US point of view, it's adding a lot of supply pressure to prices, and when we look at these markets a little bit in more detail, we'll also look at how that's impacting on the demand side. So I'll focus now on supplies, both in terms of milk and cheese, and I'll look first at the US market, and then we'll move on and do a similar thing for the EU. So to start with, this is the supply situation in the US in terms of milk production. So far this year, it's down marginally, it's down 0.3%, but as I was mentioning earlier, this is the first time in a long time in the US that we've not seen growth, and it's typically at around 2%. So for their market, it's very, very tight. 2022's forecast for the full calendar year is they expect to be up by 0.1. It's really, pretty much flat. That's neither here nor there when it comes to milk volumes. And 2023, they expect to see some recovery. Now, part of that 1% year-on-year growth is not that optimistic, because in essence, it's growth on a very low year and on reduced volumes. So there isn't this expectation that we're going to see a lot more milk coming onto that US market to be made into the various dairy products that they produce there, of which, of course, cheese is a big part of that market. If we switch over now and look at cheese production in the US and their stock build, you can see actually how, despite the fact that we've had this reduction in available milk, we've actually seen cheese production grow. Part of the reason for that is that they have invested in new capacity to manufacture cheese, and so it's pulling some of the milk, this I suppose scarce milk, into cheese production, and we've seen growth in cheese production. Maybe of less interest to you, but what's happening with that is that other dairy products are actually sort of being contracted in terms of their supplies and their stocks, because the milk's going into cheese rather than into butters and fresh milk and other dairy products. So we've seen a growth in cheese production, but it actually looks like what's happening, if you look over at the second graph there, the cheese stocks, is most of that growth in cheese production actually seems to be going into stocks. It doesn't seem to be disappearing. So the stock buildup is actually, positive. And that's a sign that there's perhaps slightly weaker demand than we would hope, given how much cheese is being produced. That stock buildup is starting to weigh on wholesale cheese markets in the States, and it's starting to sort of put some pressure on their prices. Now, that's good and bad in the sense that it means that the retailers and the food service outlets perhaps are seeing a little bit of relief in the cost of their materials. And it also, from the US point of view, it's helping with their exports. Although and the weaker US dollar is probably also helping with that. But we're still seeing this build up in stocks. So that's going to weigh on the markets for a while. And whether you're, I guess, from a buying point of view, that's perhaps, a positive thing, because that's going to keep prices suppressed in the US, in the sense that there's a lot of availability there. So there shouldn't be a big pressure to move prices up, despite the fact that milk production's down. If we look at those prices in the US market, the one thing to keep in mind in that market is it's quite different from both the EU and the UK, in that they have a very high reliance on the hospitality sector and the food service sector for cheese consumption. Roughly about half of cheese consumption occurs out of home in hospitality. A big proportion of that is quick service restaurants rather than sort of maybe fine dining establishments, but they have a big reliance on that food service sector for the cheese markets. And about 50% of that's at home from the retail sector. So this is showing the wholesale prices, which have been increasing quite rapidly, similar trend that we're seeing elsewhere in the world. But more recently, we're seeing sort of a stabilization of that price. They're staying at high levels, but we aren't seeing the steady increase. We haven't been since about the spring, and that'll be a function of the fact that there's those high stocks sitting there. When we look at consumer prices, which is the other, the flatter lines, if you will, the CPI for at-home food is increasing probably the fastest of the three, although cheese seems to be keeping pace with that, but perhaps at a slightly lower rate. So the not at home CPI, which is measuring the price that consumers are paying and the rate of change, has been increasing at a relatively steady rate for the last couple of years. So it's not shooting up rapidly. And again, that's perhaps a positive thing, although we are seeing some pressure on prices for consumers. It's not going up at such a fast rate that it's really hitting their, they don't perceive it to be hitting their wallets too hard, although that might change as the cost of living crisis deepens there. So we've got slightly different rates of inflation depending on where you're buying your cheese, but they're all moving up at a relatively similar level. And the fact is that they are increasing. If we then sort of look at it from a broader point of view in terms of trying to assess where things might go, obviously consumers' demand is going to be very much a function of how much money they've got in their pocket and how confident they are that they're going to be able to still afford to buy what they want going into the future. So the US do produce forecasts around inflation and what they expect inflation to be over the next couple of years. And currently, just like at a short-term sort of point in time inflation figure for food is around 13%. Dairy is slightly higher than that, but at 15%, and that was as of July 2022. So big numbers we haven't seen probably since the 80s. For some people, they've never seen numbers like that in terms of food, the price of food rising so quickly. But there is the forecast is for that to stabilize next year, although still be positive So they're still expecting in 2023 to see positive inflation, but at much lower rates. However, once prices get to a certain level, unless we start to see incomes increase at the same at a decent rate, that's keeping food at a quite at a high cost. So the other graph I've put in there is more around where what the expectations are around income growth. And GDP is the gross domestic product, and it's a good way of measuring potential growth in income. It's the growth of the economy. And you can see for the US, it's very, very low. It's at 1%. That's the expected growth rate for 2023, and very, very flat. So there isn't any expectation that we're going to see some decent growth in the economies over the next couple of years. I've just put the UK on there for comparison. We're not expecting any growth at all, which may be why the Bank of England decided not to, or the government decided not to publish their economic forecasts, is because it's not very good news for consumers. So given those situations that we're in an environment where really tight supplies are I suppose, putting price pressure on products like cheese, but at the same time, on the demand side, we're seeing things tightening up. So people being less able to pay those high prices. Overall, most of the reports coming out of the US when it looks at how consumers are going to respond to inflation and those higher prices is that they're going to really start to feel that their budgets are stretched. And their response to that typically is that they will reduce purchasing, particularly at the retail level, when they're buying food for home. And on the back of that, there are reports that retailers are starting to increase their promotional activity to try and keep people coming into the stores, to keep people buying, but people will start to trade down. So they will trade down from whatever level that they're purchasing at now to more value-oriented categories, to those sort of saver categories. And that's typically to allow them to keep buying the same quantities to feed their families as they typically would, but perhaps just at a lower quality level or a lower price point. Although the other, I suppose, feature that they say is occurring within US consumer reactions to this is that they're saying they're trading down to trade up, which I thought was an interesting little turn of phrase. But what that means is that people are perhaps trading down for the standard purchases to allow themselves to occasionally buy a little luxury, so that they can buy maybe that special ice cream on a Saturday night, or hopefully maybe some specialty cheese to give themselves a treat. So that's another sort of consumer reaction to this situation where their budgets are tighter and their money's not going as far as it did before. On the hospitality side, the recovery is pretty much stalled. So there's not as much data there to kind of see, but there are some trackers such as the number of reservations that are made at restaurants. Those sorts of things have kind of flattened out. They haven't yet sort of dropped year on year, but the growth has stopped, which we had seen food service and hospitality growing over the last year or so as they recovered out of the COVID lockdowns. That sort of growth and that recovery seems to have stalled. And there's less, people are still going out, but they're shifting again, just like they're trading down at retail, they're shifting away from perhaps the dine-in sector to the quick service restaurant. So it's almost, again, a reduction in the cost of going out to eat in the US. So that's roughly sort of where it sits in the US right now. I think I read something again this morning that they haven't yet sort of announced a recession in the US, and even though their quarter-on-quarter growth has either been flat or reduced, they haven't yet announced a recession. And that might just be that they're trying to kind of delay that because it's keeping consumer confidence from dropping much further. I'm going to move on now to the EU and cover similar sorts of things. So again, milk production in the EU is down, again, because those high costs that are impacting farm production. But it's not down, it's down 0.7% year to date, which is just under 1%. but again, on the back of a relatively low year. So again, we're still not seeing lots and lots of additional milk coming onto that market. 2022 as a whole, we're pretty much on track to what they forecast. They expected the production to be down 0.6%. And for next year, they're expecting marginal growth, anywhere between 0.2 and 0.4%. They haven't kind of locked that one in yet, because I think they're still trying to see what might happen with the energy policies and how that might affect the supply chains there. So we're still expecting milk production to drop in the EU. But if we look at cheese, and if we look at cheese production there, it's quite a different story to what we saw in the US, in that we've seen less cheese production this year compared to last year, whereas in the US we were seeing it growing. So far this year, really, our cheese manufacture across the EU has been down pretty much every month this year so far, except for maybe January. And if you look at the stock situation as a result of that, you can see how it's dropped down quite significantly as of January 22. So, the very far end of that graph, you can see how low cheese stocks are. Now, they don't split cheese stocks out by variety. And to be honest, cheddar's probably not one of the largest varieties in terms of the overall EU. It's big in some countries, but then Gouda and Emmental are quite large varieties for production there. But it does still impact the whole sort of cheese complex, will still impact where prices are going. And if we look at that, again, this red line is showing wholesale prices in the EU. Same sort of trend that we saw in the US, but we haven't yet seen any sort of flattening of that increase. So we're still seeing cheese prices rise at an EU level. There's variability around product type and market, but overall, the overall average is up. And with stock situation as it is, that's unlikely to change. We can't see that unless demand changes quite considerably, the pressure on prices there is going to remain. Again, consumer price index for cheese and food rising slightly faster than they were in the US. We're seeing both all food and cheese rise between 13 and 17% as of August 2022. So some pretty chunky increases in what consumers are paying for food at an EU level. Again, if we look at sort of where we expect that inflation to go going into the next year or two, I think the average inflation rate for this year is forecast by the European Central Bank at 8.1%. That's going to be taking into account lower inflation at the beginning of this year, offsetting some of the big rates we're seeing recently. And that's only going to go down a little bit for next year. So again, they don't expect that inflationary pressure at the consumer level is going to go away anytime soon. And similar to the US, the Eurozone's actually expected to see a little bit more growth than the US economy over the next couple of years. So they're expecting a 2% growth, but it's not big numbers. It's given the rate of inflation, it's hard to say whether people are going to be seeing big enough increases in their pay packs to offset some of that inflation and to keep the demand levels at the rate they are already. So at a EU level, again, higher prices, reduced income, stretching budgets. So no different than in the US and no different than in the UK for that matter. We are starting to already see some reduced purchasing at retail. I think in the latest report that I saw around retail sales across some of the key countries, so Italy, France, Germany, the Netherlands, retail sales were all down. That was in July. So I expect that that's going to be the trend going forward. People, again, similar consumer reactions in most developed nations, really. Consumers trade down. They move from perhaps branded or luxury products down a level as their incomes become more stretched. They buy less treats. And consumer confidence rated by the European Central Bank in their latest survey is that it's lower and it's trending down. So there is quite a lot of worry. I think in the EU, some of the sort of perhaps the pressure, there's more pressure here because we are more exposed to those energy markets and the impact of the war on the Ukraine, because some of our energy is so tied into the Russian market, whereas the US is a little bit more self-reliant when it comes to their energy supplies. So they're perhaps feeling a little bit less of that pressure, and that might be affecting both their growth and also their consumer confidence levels. So I've talked quite a lot, put a lot of information out there. I'm going to stop there. The summaries on the screen there. Milk production is unlikely to recover in the next year or two in terms of moving back into a growth trend. Production costs are expected to remain high. Our outlooks when it comes to things like feed ingredients for dairy are that they'll stay at high levels because we don't see global crops and yields improving over the next little while on the back of high fertiliser prices. And that's linked right back into those energy markets. So it all links in together. There is some downside risk. We don't yet know what that looks like to Farmgate milk prices across Europe. And that'll be on the back of how quickly and how, I suppose, severe that demand reaction is to those higher prices. So how high will the prices go for consumers, and how will their demand be impacted by that? And that will feed back into how much farmers are paid for their milk, and therefore how much they produce. On the macroeconomic side, there are the headwinds in terms of low GDP growth, potential recessions in many of the developed countries, and food price inflation will all have quite big impacts on demand. What we don't know yet is which of those two will outweigh the other, and what the price direction will be on the back of that. So I will stop there, and I will we can have questions.
Thanks, Patty. That was really enlightening and hopefully not too depressing for everybody in terms of what's going on in the world. I think it's really sort of interesting that, you know, this kind of feedback. It would be interesting to throw out to the floor actually to everybody as to, are you getting this kind of feedback from your buyers in these markets, you know, in terms of how that, you know, how things are working in the US in terms of prices and etc. And I think it'd be interesting to find out from you guys. So does anybody want to pop their hand up or pop a question in or what have you? No? Okay, all right. I potentially think that maybe Patty has answered many of your questions then. And I think that I think it's been really useful. I think it's good to know that these things are the issues and the contractions are happening in all markets. It's not just the UK, and I think that it's a worldwide issue. But yeah, I mean, thank you, Patty. Is there any other questions you wanted to ask out?
I guess, yeah, I think it would be interesting to see and to hear back sort of whether people are finding it difficult to maintain sales, or whether, you know, how much pressure there is perhaps for them to reduce price, how competitive they're finding that market when they're trying to secure, you know, new export orders. It'd be.
Is anybody out there willing to sort of speak, or actually not? You're very quiet today.
They are.
Not normally this quiet, are they? Okay then. Right, well, in that case, we possibly may as well leave it there. Thanks for all listening. Do let me know if there's anything you need. Hopefully we'll be sending out the slides, and we'll be sending out a recording of this. So do let us know if you've got any questions after the event. Great. Thank you very much. Thanks very much, Patty.
Thank you.
Bye.